Good morning, everybody. Today, Mark Burt brought to you by Mike Bjork. Today's Hump Day. It's Wednesday, December 10th. We don't really have any economic news releases on the docket today. So basically, they're kind of catching other things. The stock market's down, taking a bit of a beating again today, as Dow is down about 150 so far this morning, even though it was down over 200 yesterday and pulled back to about 50 at closing. Uh, but today, again, some of it's the carryover of the concerns in Europe, where they basically are concerns about elections going on in Greece, where they, if you recall, they had the bailout and they had some terms agreed, and some of the opponents in the elections that it's running pretty stiff in competition that they're against the terms and may create problems politically. Also in China, of course, we had yesterday the Chinese coming in and uh, basically trying to remove the toxic bond buying, and they're trying to push more financial responsibilities onto the local governments, because there's concerns that they were borrowing too much money and not being able to be repaid, and they're basically telling their local governments that they're not going to be bailed out. To basically come up plan and try to use some financial constraints. Uh, and over here, basically, we got some slumping oil prices. As you can see at the gas pumps, we all should be happy about that. We were just talking earlier today how now we're seeing in California under $3 a gallon. So beautiful news right there. But just want good for us. But they're just on the stock side of things. They're trying to figure out, okay, how do you measure the value on the energy sector? So there's concerns about maybe the profitability on the energy section. Today, you can't really look at the chart too much today. We have what they call a bond rollover. So what that means is that they repackage the bonds, and sometimes we'll show about 30 basis drop, even though there's no change in pricing as a term. So what happens is that they package up the new bonds, they sell them, and then they start refresh the pricing for the new month. Approximately every 30 days, they do that right around this time period. It happens to be today. So you can almost kind of disregard what that looks like. So today we're actually looking, if you add that back, we're hitting more towards the upper trend line, and right now the market's looking pretty bullish. So current current interest rates for home loans today are looking a bit better compared to yesterday, and again the mortgage interest rates trends are looking a little bit more positive short term. Although we know, obviously, long term, like that, at least the next year or so, the rates will be going up. So, but in the meantime, take advantage of these nice new low rates, and hopefully this will help out the holidays. All right, folks, you guys have a wonderful, wonderful day, and we'll see you guys tomorrow. Thanks so much for watching.